when sold by, what is the month? March 14. How much is that? 40 lakhs. Less cost of acquisition. How much is that? 25 lakhs. 25 lakhs in the inner column. So, exemption under section 54 is withdrawn. So, therefore, 25 lakhs minus 25 lakhs. Now, what is the cost of acquisition? Nil. So, short term capital gain. How much? 40 lakhs. The normal rate of taxation will prevail for this. Are you clear? That's it as far as this problem is concerned. Okay? Are you clear? But of course I told you, assessment year 14-15, in which STCG will be offered for taxation. So this is conveyed in 54 EC subsection 2 regarding the ineligibility of this gentleman, whereas this one is communicated in section 54(1) subsection A. So you can just check up. That is what we have just read out. 54(1) subsection 1, sorry, 1(1). The cost shall be taken up as nil. Shall we proceed to problem number 6? Ganapati, do you have any doubt? I think you have some doubts on problem number 5. I think you are living with problem number 5 for a long time. So unless your doubt is clarified, I am not just allowing the entire class to proceed further. Come on, what is that? I told you, Ganapati, 54 EC is not applicable in this case. What? He had invested beyond a 6 months period, so 54 EC is not applicable. Did I not write? So I have just written that very clearly here. He is not eligible at all. Why we should be really worried? Now I understand what anxiety that is running in your mind. Sir, supposing the investment is made within 6 months period, what would have been the case? Yes, 54 EC exemption is available. Now our friend is asking the question, how much is the exemption is eligible for? Correct. That is a nice question. You could have asked there itself. Now let us just take up a sort of an question like this way. Had it been, so there is a query raised. What is the query raised? If the assessee had invested within 6 months period, that is before April or until the end of April end 13, April 13. How much he is eligible for exemption under section 54 EC? Am I right? Is this a query that you are raising? Hey, no problem. Capital gain. How much is the capital gain? This is the capital gain. Investment made. How much is the investment made? 20 lakhs. So, how much is the exemption that is available? Amount is the exemption available, which is equal to, within brackets, investment divided by capital gains, bracket closed, into investment. Correct? If investment and capital gain are same, 100% you are eligible. Now we will put it this way. Investment divided by capital gain into investment. That means he is eligible for exemption only to the extent of 7,33,303 under 54 EC. If that be the case, what will be the taxable capital gain? One moment, let me complete. So what is that previously we have taken up as capital gain for him? 29, 54, 769 minus 733. The taxable capital gain would be 22,21,465. Yes. What is that doubt? No, your question is unwanted question. Can you repeat that once again so that I will make it public to the entire class? Come on. Concurrently we are applying 54 and 54 EC. Okay. See, actually the query raised by Ganapati is that should I firstly apply section 54 exemption and then take up section 54 EC. It is something like Dasavadara, Lord Rama first and then Lord Krishna. Is it like that? 54 Rama and 54 EC Krishna. Is it like that? Is that the question? Am I right? So let me tell you. For the purpose of argument that 54 lakhs 54,769, if you want to invest in NHAI, there is also a limit that you have in 54 EC that you cannot invest more than 50 lakhs in one financial year. Correct? Just for argument purposes. It is not happened. For argument purposes, when you take up investment to be made, you can't invest more than 50 lakhs. So therefore, Mr. Selvan, who knows all these provisions through his chartered accountant, might have just felt 54 EC has got limitation. There is no such limitation in the case of 54. And 54 EC application for which there is no reference made that the capital gain after deducting towards section 54. There is no such impression that they have created in 54 EC. So concurrently we can apply. What is the problem? Concurrently means simultaneously. Why I should always think that EC should be applied after 54? See, in the purpose of computation I have written one after the other. That does not mean I am creating an impression that 54 firstly you should take up and then 54 EC. It is not like that. Concurrently you can do. Your computation is not based on the capital gain after deducting towards section 54F. So in our computation also I will just put it with mathematical numbers, then you can easily understand. What is that? 20 lakhs divided by capital gain. I have not taken the capital gain after deducting towards section 54F. So therefore, the question itself is not appropriate is what I felt. 54, 769 bracket closed into 20 lakhs. Are you understanding all of you? So there is no 54 influence you have when you are applying 54 EC. The very wording I have used is concurrently you can. Not one after the other. I never used that. Simultaneously you can take it up. Is that clear? Are you clear? That's it. Yeah, what is that? There is no pro rata provision given in section 54. So, let me just show you. See, why I am just showing this, there is paragraphs and section is that you will gain the confidence. Say when a faculty member is telling, so definitely he had also verified in a previous batch, so a lot of questions which were raised. Look into that. If the section 54, all of you please understand, if the amount of capital gain is greater than the cost of residential house, so purchased or constructed, the difference between the amount of capital gain and the cost of new asset shall be charged as income of the previous year. That's all. There is no pro rata. Pro rata is there only for 54 EC. Is that clear? Some of the exemptions you have not capital gains as a base. They are expecting net consideration for investment. I will just show you at the appropriate place. So because when I draw some other section here, we will just not be completing this problem. Are you understanding? And one more thing is that 54, section 54 is applicable for long-term capital asset. 54 EC also applicable for long-term capital asset. So the latest one, for the purpose of understanding, I just taken up 54 GA. In that they said capital gains arising from the transfer of a capital asset, that means it includes even STCA also. Are you clear? So therefore section 54 EC, for which we are very clear about what we have got to take up on pro rata basis. Investment divided by capital gain into investment. Are you clear? So now we will take up on to problem number 6. So that is why I am just spending or investing a lot of time. So at the end of the discussion, that is when we just push off and when we try problems, our things will be very clear. Now we will take up on to problem number 6. Mr. Rakesh purchased a house property on 14th April 1979 for rupees 1,05,000. He entered, here also I will make it as 150. Mr. Rakesh purchased a house property on 14th April 79 for 1,05,000. He entered into an agreement with Mr. B for the sale of house on 15th of September 82 and received an advance of 25,000. However, since B did not remit the balance amount, Mr. Rakesh forfeited the advance. Later on, he gifted the house property to his friend Mr. A on 15th of June 1986. Following renovations were carried out by Rakesh and Mr. A to the house property. Mr. Rakesh during financial year 79-80 10,000, financial year 83-84 50,000. Mr. A during financial year 93-94 lakh and 90,000. Fair market value of the property by 1481 is lakh and 50,000. Mr. A entered into an agreement with Mr. C for sale of house on 1st June 95 and received advance of rupees 80,000. The said amount was forfeited by Mr. A since C could not fulfill the term the agreement. Finally, the house was sold by Mr. A to Mr. Sanjay on 2nd of January 2013 for a consideration of 12 lakhs. Compute capital gains chargeable to tax in the hands of Mr. A for assessment year 13-14, cost of inflation or as under.